There we go. Right. Right, how are we all? How's trading been lately? It's been a little while, isn't it? Since we last caught up.
Yeah, I'm on my phase 2.
Nice, bro. How's it going?
It was pretty tough.
Always
So
is,
failing
man.
back to back.
Always is.
I always start phase 1 and phase 2 is, I don't know why, it's only 5% target, but
Yeah.
still keep failing.
Just hey, take it nice and steady. Take it
And
nice
you-
and steady. You know, when you break down what you've actually got to
Yeah.
do, if you imagine you've got, say, $100,000 account, for example, okay, so you've got $100,000 account, and you've got to make 10%. Your max drawdown, let's just keep the numbers simple. Your max drawdown is 10%, okay? You're
Yeah.
actually only playing with $10,000 worth of capital, okay? The account size is 100,000, but you can only drop down $10,000, right? So that's the lowest you can go. So when you think about it, it's not actually 10% to pass phase 1 and 5% to pass phase 2. It's 100% to pass phase 1, and it's 50% to pass phase 2. Because really, your profit is relative to your draw. If you were trading this like a normal account, you're actually trying to double your account size effectively. You're trying to make $10,000 on top of a $10,000 account. That's why prop challenges are so difficult, because you have such a small amount of wiggle room to play with. You know, I'm sure some very experienced traders on losing streaks, when they're trading kind of 1%, 2% per trade, you know, very experienced traders, they may be going down 10, 15, 20%. In order to make their profit. So it's one thing to really take into consideration that the reason why so many prop firms have taken away their time challenge is because they were putting unrealistic expectations. You know, to make 10% on a $100,000 account with only $10,000 of drawdown, you're effectively having to make 100%, and before you had to do it in 30 days. So passing a prop firm challenge is, in my opinion, the elite of the elite. If you can pass a prop firm challenge, you're trading in a way that is really, really quite incredible. So my advice to you always is just take it nice and slow. If you need to trade 0.1% per trade so that you're taking, you know, 0.4, 0.5 on a winning day, if you go to 4 or 5R, that's a really good progression. 20 of those trades successfully is going to get you past. So, you know, just bear that in mind, is that there's no rush. You know, think how long you and I have been speaking, and man, we've been speaking for years now, you and I. You know, there's no rush. This is going to be something you're going to be doing for years. So just take your time with it. Enjoy the process. Don't let it stress you out. Don't feel like you have to do it in any particular time frame, or that you have to do it, you know, to impress people or to earn your money, because, you know, if you blow the account, the loss of losing that account is much more damaging than, you know, the gains that you might make going forward. So just take your time with it, and just enjoy it. That's the most important thing. And that we're always going to blow account. I blew account the other month. You know, you're always going to blow accounts from time to time. It happens. If your trading conditions aren't there and then you start making mistakes, it happens. So most important thing, just stick to your strategy, follow your rules. Don't take anything that you haven't planned for. Don't take anything you haven't forecasted for. Don't take any trades that aren't in your setups, and just, you know, just go from there, really.
Yeah.
Where are you up to on it at the moment? Are you in drawdown? Are you in profit? Anyone else doing any challenges at the moment? No. Anton, how are you, dude? You good?
Yeah, I'm good, mate. How's it going?
Yeah, not too bad, mate. Not too bad. I'm just saying, it's very, very hot here in the UK at the moment.
Yeah, it's hot here in Jersey.
Is it?
Just come from the beach. Yeah.
Have you? Oh, very jealous. Very jealous. Right, let's get stuck in, because I've only got until about 8:30 today. So let's get stuck in. Let's have a look at some charts and some trades. So I kind of wanted to spend some time today just talking about, how can I get rid of, is it culture? Yeah, good. Just kind of talking about Euro USD last week, because I think it's a really important week to have a discussion about, because in hindsight now, it was really clear and obvious what was happening. But it's like they say, isn't it? Hindsight is, 2020. So I want to talk through kind of what my thinking is, where my thoughts are, for price going forward and going from there. One of the things I've been playing around with lately, just as kind of a bit of an additional confluence, is I've been trading with another guy called Diego, and he uses Elliott waves quite a lot. And whilst I'm purely a liquidity-based trader, I think having an idea where price might be headed from a higher time frame trending perspective, I think is it's something I'm just looking at. I'm not trading it, it's something I'm looking at to see if I notice any patterns. So he will look at these kind of ascending and descending channels, and he does really well with them. So if you see these on my charts, don't worry about it. I'm not changing anything in the strategy. It's something that I'm just keeping an eye on. The theory is that these patterns effectively will be tested multiple times before they break. Before, when I first started trading, I did trade kind of higher time frame trend line based strategies. I don't think it's something that I would trade off the back of. I'll always use my same setups. But if it gives me an idea of where price might be headed, maybe it's useful. I don't know. So just for now, just ignore them, okay? And I'll update you once I've got the data on it and go from there. Every weekend, I host a Sunday webinar with my mentorship students. Starting from March 2024, I'll be opening this up to my YouTube family too. Get an insight into the way that we trade, the strong money forex strategy, and a taste of the profits. The best part is, it's completely free. All you have to do is head over to my Instagram @strongmoneyforex and send me a DM with the word webinar. So let's I'll tell you what I'll do, just hide that quickly so we can see. Let's talk through. Who traded Euro USD last week?
Me.
Yeah, how'd you get on?
Me.
Tell them.
How'd you guys get on last week? Good, bad?
Terrible.
Terrible. Yeah, tough, wasn't it?
I finished 2 hour up.
Oh, nice. Nice. And what were you doing? Were you selling?
Unpredictable.
Selling this?
The days where I would have had losses, I actually took those days off, luckily. Otherwise, I would have been down.
Okay, that's good. That's good. So I think when we look at, and I'll tell you what I'll do just to keep it nice and easy. I'll just hide this all for now. When we look at this price action, it's actually pretty clear what is happening. So this was on Monday, okay, and I'll draw our weekly cycle on. So this is our Monday, and I can kind of extend it from Friday really. So that was our accumulation. We then had, now we can see a clear manipulation here, okay. What did that manipulation do? What did we notice that manipulation did? Can anyone tell me? What was that manipulating?
At the 50%.
Yeah, exactly. So we had liquidity here. Liquidity here, which was, internal liquidity. It's nothing to scream home about, but it is liquidity still. There is an area here that's an Asian high from Friday, the previous week. So that was quite a recent level. So that has some weight behind it. There would people think about it from, the mass perspective. Lots of people have been selling from here, right? Lots of people would have been selling from there. So lots of people would have had their stops above there. So there was liquidity there, definitely. And the other thing is, I think, was that Anton you said?
Yeah, 50%
yeah.
Of the range, isn't it?
We tagged 50% absolutely perfectly, okay? In fact, it was almost, it was literally to the pipette. I think between there and there, we've got 2 pips, okay? So just under 2 pips. So really, really clear tap of that equilibrium point. Now, my expectation and the way that I was trading it, as you probably were watching along, is, and the thing which I'm really happy with last week, although I ended up with a losing week, I traded pretty much exactly as the strategy teaches us to do, okay? We are in a higher time frame bearish range. However, we've started rejecting and creating bullish price action. The expectation is, even though this is very heavily bearish, the expectation is just like this, we were going to come back into the higher value premium areas. Didn't quite get it here, as you can see. I think probably what we did is we probably just rebounded off this EPA level. Not quite there, but you can see we're there or thereabout. With the EPA as well. Just remember, guys, we in most scenarios will tag the EPA level, but it's not always absolutely perfect. That isn't just a random rejection. It could be that my broker feed, that spike was a little bit lower. It could be that the EPA was the entire supply zone, so actually it went slightly above EPA and then rejected. So as always, it's not an exact science. So it's one thing to be conscious of. So for me, I'm looking at thinking, do you know what? We've come almost to that top 25% of the premium, and then we've rejected really, really nicely. Maybe that could have given us some indication that we're going to do that again. But look, all that happened here, and the reason why I was quite happy with my trading last week is we had some buys up, buys up, buys up. These were all valid buys. This here, we came back down into the lower half of that range. So that is our discount range. Came back down to the lower half of that range. We tagged into that imbalance there. And ultimately, you know, we took a buy. Well, I took a buy from there, and I think we got stopped out on that one ultimately. So look, it is what it is. Now, for me, I wasn't happy trading this bearish. What I thought we might do is we might come down to here, have a rejection. We did take a trade from here because we had a setup on the lower time frame, if you remember. Take a long from here. I think it was possibly that move there. I can't remember. No, it was a little bit late in the day. Possibly up here. Yeah. So I took a long here, I think, from what I remember rightly. And that was, you know, another loss for the week. So we ended up being about 2R down. We made a little bit back here and there, but ultimately I ended up about 2R down all in all. So for me, I was pretty happy with that. I knew that I was trading my strategy. I knew that I was doing everything the right way. But all that was happening really is that was our manipulation for the week. And maybe I should have factored in more of the weekly cycle. Maybe should have factored in the fact that we've tagged in the premium level. Maybe I should have factored in the fact that we are at a bearish higher time frame structure. And actually, price doesn't have to come up to this liquidity level. Yes, that would be ideal. Is it going to happen now? Possibly. And, you know, it hasn't broken a new low here. So that's a clear indication that now is a really, really high probable liquidity area that we could be targeting for the rest of the week or maybe next week. And are we going to spend the rest of this week or maybe the next couple of days moving up to here and then selling off for the rest of the week? Possibly. We've had accumulation, okay? We've had, or in the start of our manipulation, do we get all the way up here? And then do we then see a distribution to take out that liquidity for the rest of the week? That is probably my preferred setup. The other thing as well that I think is really important noticing with the weekly cycle is that it will sometimes, I don't know if you guys have noticed it, have you noticed that sometimes the weekly cycles overlap with each other? Have you seen that before?
Well, sure they do.
Yeah, so, you know, you've got in here, this is our Friday reversal, right? So that's our end of play reversal, but that's also all part of the accumulation as well. So our accumulation, our end of play reversal is kind of crossed over. You know, even if we class this little tiny bit down here, as our end of play reversal, it's also our accumulation. As you can very clearly see, we've got accumulation, we've got a manipulation. And those of you, if you did hold that trade from Friday, you'd be in a really, really nice position now. You know, probably going to clear out those liquidities. We've got external liquidity up here as well that we can definitely pay attention to. So that's kind of what I'm thinking that is probably going to happen for the rest of the week. As always, you know, we trade what we see, not what we predict. So the fact that now we've got bullish range. Firstly, if you've made it this far, thank you for watching. I've got a freebie for you. Go ahead and hit that like button below and comment with the word vid for an exclusive free video from the 2024 Strong Money Forex Mentorship course. Side note, if you want to know more about the Strong Money Forex Bootcamp, send me a message on Instagram. Broken bearish. Let's have a look if it's clear on the 1 hour. Yeah, so this now is our range high. This now is our range low. We are still technically internal to this little range here. So it's an internal range, but we have still got 2 liquidity points that we can pay attention to. So we've got liquidity point here, which is external liquidity point there. That is an area that we want to see being taken ideally. We've got another external liquidity point here. So we mark that one as well. So we've got, you know, just cause for price to come down bearish, but the likelihood of us coming to take out either that liquidity point or possibly just that liquidity point, take out the external, because that kind of tag into the premium and that rejection, it's been relatively strong. Yes, it hasn't made any new structure, but it has moved price quite well. So we'd be naive to ignore that liquidity high. So these are kind of my two areas that I'm looking at now, with the ultimate aim that that bearish price action continues, and we push all the way down now to one of these lower areas, potentially taking out some of this liquidity down here, which would be lovely. Again, using range from range, we've got this range up to this range. So that's our most recent kind of higher time frame bullish range, as you can see there. Really nice clear bullish range on the daily. So this external liquidity point down here as well, it would be a really good place for us to target. So I'm still overall bearish, but what we've had here is we've had FOMC up here. We then had news towards the back end of the week, and it's clearly pushed price down, created this lovely little range. We don't really want to be selling, and the reason why I didn't sell from here is because, yes, you can sell from equilibrium, but you've got to be really careful with that, because as you know, what often happens at those equilibrium levels? What often happens when we reach these equilibrium levels?
Just play around that area for a while.
Consolidation.
Yeah, consolidation. And where does it usually go?
Usually continues to push up.
Continues to push up,
Typically.
exactly.
Yeah.
We usually, in most scenarios, and as always with trading, it's a game of probabilities. We usually, in most scenarios, muck about at this equilibrium level, and we all get stopped out over and over again and blow our accounts and get really frustrated and come into the Discord group and be like, why are we trading at equilibrium? We have those chats like every other week, it feels like. And I'm guilty of it too, because you look at these setups and it's really hard when you're looking at these higher time frame ranges. It's really hard because you drop down to the 5-minute charts and you start seeing setups everywhere, don't you? This is 3 days worth of price action at the end of the day. So you think you see all these really clean setups, but prices you can see here at this equilibrium level is just really consolidating. So I think not selling from here is probably the right call. There was no clear indication. If you look at the overall structure, we've got bullish structure, pullback, bullish push that we all expected was going to do that, but it didn't. So bullish structure, pullback, failed to make a new high, bearish structure, hasn't broken this high to the left, so that's really difficult to trade off. Then we mucked about here, so my expectation is that actually, if you look at that, this is just a bullish setup to go up here, which it didn't do. Then we had this push down, and this I would say is my only mistake of last week. If I look at, although I had this external level clearly marked on here, if I jump down to like the 4-hour time frame, what do we see below that external level to the right? What does price do? What are these candles here showing me? Would you say they're showing rejection? Even on the daily time frame? Are they showing us a rejection of that external level? No?
Which candles are you talking about?
These ones here. Below this, so this external level, the candles below.
Yeah, it gives you initially, yes. It kicks off. It takes the external, starts to push up, so it's rejecting that initial area.
Mm-hmm.
But it doesn't push up. It doesn't have a especially on the lower time frames. It doesn't have a material kind of volume push.
Yeah. Where is the momentum?
You'd want to see a breakage structure just above the, or else you're very much at risk of it continuing. Exactly there. Yeah. So you want to see that taken.
Yeah.
Those points above it, and I think we've got at the minute. You're a bit at risk either way, right? So if you don't, if you're looking to enter long, you'd want to see it try and test the level below that it's just created the new low.
Yeah.
And respect it.
Yeah.
Break structure or break again. And then that gives you the confidence that momentum's probably swung.
Yeah. So we didn't, and I was trading this section here. So the way I was trading it was off the back of discount, which again, I'm happy with. I'm in the discount area. I'm in a bullish momentum market. So my expectation, and seeing these kind of bullish pushes with liquidity taken out, okay, my expectation is that we were going to go bullish, okay? Now we didn't do that. We didn't do that, as you can see. What would have been even better here? What would have really got us into a much better trade here? What would we have needed here to give us a much better trade in hindsight? Just in this section here, what could we have had to the left? Anyone?
I would look for the external liquidity.
Yeah,
to
key
take out.
liquidity. So if that pattern here was on the external liquidity, I would bet on it that it was going bullish. But what we've had technically, even though it hasn't given us a setup, is we've had a BCR, right? We've had a build-up of liquidity. We've had a consolidation. In fact, you might have even had it. Did I miss this? Kind of. So we've had a build-up of liquidity. Is it clear on the 3-minute? Not really. Kind of have it there. So build-up of liquidity there. We have this consolidative pattern. And we have a raid. It's not the cleanest, admittedly, but that technically is a BCR pattern, right? We've got a raid of liquidity there, and then we've had that rejection, pullback rejection. So really what's happening here is, whilst I was looking at this, thinking, do you know what? We're in discount. We've got imbalances. We've broken some structure to the left, even though it's not key structure. It's not like that high there, which would have been ideal. That for me, with the kind of rejection and imbalances and stuff, that for me was enough to get into the trade. And I don't think that was a mistake. I was pretty happy with that, to be fair. I felt like I traded my strategy. I was in a discount area. It was an area where buys were likely in a bullish momentum marketplace with liquidity taken. The only thing that was missing was key liquidity. I had internal liquidity, didn't have key liquidity. Now, the difference for me, and this is why I didn't take that, is when we reached below the external, see how we didn't reject it? This little section here, see that? Okay, what we did is we just mucked about underneath. And if you jump up to pretty much any time frame, yes, you've got rejection, but that rejection, it doesn't really give us. Now, I didn't trade it because it's 7 o'clock at night, but that rejection didn't give us any structure to trade off. Not like this did. That, for me, I was looking at thinking, do you know what, that's a nice structure to trade off. Yes, it could be better. Yes, it could have taken out that high to the left before we moved and entered. It's like anything. Sometimes you are going to maybe blur some of your strategy rules because there are enough confluences in your favour. But for me, it was 7 o'clock. I'm not going to take that trade anyway. I know my chance of a reversal at 7 o'clock in the evening is pretty low. What I was looking at is I was looking at all of these time frames and thinking, do you know what? It doesn't actually really look, especially an hour and above, it doesn't actually really look like we're rejecting that external level. In fact, when you zoom out, it's an internal level. Yes, it's a 15-minute bullish structure. If it had been earlier in the day and that had been lower, then great, but it wasn't ultimately. And what I was actually looking at on reflection is all of these candles, these are closes, right? These are candle closes, yeah? Would you say those candle closes are clear and convincing? Below the external level. This one here. Simple question, guys. Yes or no?
Yeah, for me, yeah.
Yeah, they're clear and convincing, right? 1, 2, 3, 4, 5. Got 5 2-hour candles clearly closing and convincingly closing below the external level. There was nothing here indicating that this was a really, really, clear rejection. Now, I was looking at this Asian sweep trade on Friday, and I didn't take it. And really, in hindsight, and if I'd zoomed out and I'd done my analysis a little bit sooner, this was actually a really clean setup. So we've got Asia liquidity and other internal liquidity. Let's just call it Asia for simplicity. So we've got Asia's been swept, and we've had an external liquidity there swept. So that is the external of the lower time frame range, right? Yeah. So external liquidity and Asia's been swept. Frankfurt creates an initial push down. As we know, Frankfurt is a weak area, which is then being manipulated itself. So what does that give us? What's that move there?
Fake break.
Say again?
Fake break.
Yeah, fake break of structure. So fake break of structure, well done. 10 points to you. So fake break of structure here. We then could have entered off the back of an MSU. Do we get the MSU? Possibly on the real low time frame. You've got an MSU there. Yeah, do you know what? Remember how the candlesticks are formed? I'll just draw this on so it's easier to see. So where's the candle? So the candle's opened here. Push down, push up, push down, push up, push down with imbalance, manipulation, and then that would have been the golfing. So if you'd been really fast on your feet, you could have got yourself in to a trade. Let's say you got in there with a 3-pip stop. That was a beautiful trade, because once you've got that false breaker structure and you have the liquidity trap taken, remember, you can get in straight off the back of an MSU. So once you've got that complex reversal, so a false breaker structure, got clear momentum, we've then manipulated the initial manipulation, which is that. So this has manipulated that, okay? You've got an MSU setup, you could have gotten off the back of that. Had you got into the back of that trade, okay, which now we know is perfectly valid, you'd have been sitting on a lovely 13R. Now the way I would have actually traded it, if I'd been properly paying attention to it, is I would have traded off the back of this. So I would have definitely waited. Let me just hide that, I would have definitely waited personally, just because of how small that position, how lower time frame that MSU setup was. I would have wanted a bit more confirmation of that. I would have waited for the true breaker structure, which would have been there. And then we've got a lovely little bit of imbalance here as well, which confirms my momentum. And then what does the true breaker structure give us? Lower time frame version of this section to this section, down, retest, EPA, exactly. Perfect. Got EPA there. So the way I would have traded it is something like this. Stop maybe there, or you could have done stop above the imbalance, because the momentum's like that. It's unlikely to come back and retest anything else. We've got 1.54 down to the Asia low. And then we've got, 6R down to the low of the day, which was, all that was is just a tag into this demand zone with the sweep of that liquidity point there. So that, I would say, is the only trade that I missed on Friday. Troy, did you catch this trade? I feel like you caught this one.
No, I only traded Monday, Tuesday, and Thursday.
Someone did catch that sell though, didn't they? Was it Frost maybe? I can't remember now.
Yeah, I
you caught it as well, did you? Where did you get in? Did you take it from the top, or you take it from the breakdown?
Yeah, maybe from the breakdown.
Did you?
I didn't remember.
Yeah, nice.
Exactly.
Good catch. That was good catch. And this is why it's so important. So back end of last week, I had a couple of busy days at work, so I was doing bits and bobs of analysis on my phone. If I had taken time out to actually do my analysis on my computer, then I might have caught that one. And that's a real good hack for you guys. Those of you, I'm sure you're probably using TradingView on your phone quite a lot. A real good tip for you is just always do your morning analysis. Whatever you're doing, before you even look at your charts for the day, just take a step back. Take a step back, have a look at the charts, go down from your daily, marking your daily highs and lows, go to your hourly, look at your hourly ranges, and then just really spend some time just analyzing. If you're like me now and you're just trading kind of one, maybe two pairs, then you should have enough time to go through and really kind of cleverly analyze. And what I should have done is spot that clear close below external, accumulation, manipulation. We've got a manipulation high on Tuesday evening. I've started to break down. I'm overall in bearish. I've tagged into my premium zone. There were so many signals that were in bearish price action, and I wouldn't have taken any of these sells, just so you know. that for me would have been invalid trades because there's such low probability. The probability is that we were swept external and then pushed back higher. As soon as we broke that external and closed below it, that for me should have been a really clear sign that actually we're probably going to be going bearish from here. So I was, not upset. I never get upset for missing a trade because I would rather be more cautious than over trading, which is a bit of a flaw that I had in the past. But for me, that was the one trade that I look at and thought to myself, do you know what, I missed out on that trade. And then frustratingly, as you guys have probably seen, I closed out my, where's it gone? Where's my buy position gone? I closed out my buy like here on Friday, I think it was. I think I got in there, closed my buy out here, which is great, wasn't it? It's decent little close there. Lovely little 0.6 when I could have had a whopping 4R now. But look, again, I followed my strategy last week. I made sure I stayed true to myself, and it's really easy to see what everyone else is doing. And for you guys watching what I'm doing and missing things and jumping on the charts, you've got to always trust your analysis. I was happy at the way that last week played out, even though I ended up in a losing week. Yes, I could have had a much better week had I taken that loss, but look, it is what it is. I traded my strategy and I'm happy with it. And for me, it's back to the drawing board, making sure that I do my morning analysis on my computer every single day and just go from there, really. We've got a couple of minutes left, guys. Do you have any questions for me?
Yeah, can you go through the ranges a bit? Because looking at your chart there now, you've got that bigger range on the left.
Yeah.
And this is what I'm battling with now, because the sell that you're talking about on Friday was in the discount area of that bigger range.
So that we didn't
my
know
figures
that
at
was
the
the
moment
rate.
is
So we didn't know
my figures
that.
at the moment is backwards compared to everyone else's, where Monday and Tuesday I'm getting my best results.
Yeah.
And then Wednesday onwards, my ranges go out the window.
So you're talking about this range here.
Yeah.
So like a 4-hour range, I will buy and sell in pretty much any of it.
Okay.
So if I'm looking at like a 4-hour or a 2-hour or a daily range, I will buy and sell pretty much anywhere other than right at the bottom where my trade could be invalidated. So for me, yes, I'm in the discount area here, but technically, if you just expand that out, technically that's my discount and I would have been trading just above it. So technically I would have been in the top 25% of discount. So that would have been perfectly valid, because my expectation is, even if I don't get a tight entry, my expectation is that I'm going to be trading like this, stop above the high, to external I've got 5-6R. As long as I can get 2 or 3 times my R risk, that for me is enough potential in the trade for me to get my 2R out and hold for double that. So because that's such a high time frame range, I wouldn't be selling in here, which is why when price was down here I didn't take any sells. I wouldn't be selling in here because that's a 15-minute range, but hourly ranges, as long as they're not too tight, I will buy or sell pretty much wherever.
Even if it's in the top or bottom 25% of premium.
If we were
discount?
like right down here, then the potential of my trade is too low. Because if I'm taking that trade here, for example, the potential of my trade, I don't even get to 2R before I've got to the external level. So for me, when I'm talking about kind of higher time frame ranges, for me it's more about how many R can I get out before I hit that external. If I can get 4R out of the trade, I'm pretty happy. Okay, and you might have a massive range, remember. You might have a massive range like that. And so actually, you get a really tight entry like this on the 1 minute time frame, you might be able to get 6R before the external, which is why if it's a really big range, then it's for me, it doesn't make a huge difference. It's about the R rating that I can get. You can get into a trade like that, get yourself 6R out before the external, and then you're laughing. So 15, kind of the minute time frames ranges, I won't buy or sell in discount or premium, but the hourly time frame ranges, especially kind of 4-hour, daily and upwards, I will buy and sell in them as long as I can get to my target before I hit that external level. Because remember, if it's a higher time frame range, the chance of price coming down, tagging it and immediately reversing is much lower, remember? So what's probably going to happen is we're probably going to come down and spend some time around here. Means it might take some time for you to get to your target, but it probably will get to target eventually. The only risk that you face with that is something like this. And this is why, yes, it's lower probable. You might get to a point where you've got, say, 4R in your trade from here, but it then doesn't actually hit the external. So if you're banking on your target being at the external level on an hourly range, you probably just want to be a little bit cautious. I think use common sense. If I can get to 6R, then 2R for me is easy. If I can only just get to 4R, then maybe you might want to think again, because that's probably going to become a lower probability trade.
Okay. Yeah, I'm at the stage where I'm just targeting 2R anyway.
Yeah.
And
yeah.
my stops are pretty tight at the moment.
If you're targeting 2R though, you still want somewhere between 4 to 6R for your final target, so that 2R is a really easy target to get to.
Yeah, makes sense.
Yeah. Right, we've got 4 minutes. Yeah, 4 minutes left. Does anyone have any other questions for us? Any other questions?
Mark, may I draw on your chart?
Of course.
If you take, hold still.
Okay. Holding.
That channel, here's
Yeah.
the breakout. Again, you got another channel here. Here's a breakout.
Mm-hmm.
On the current, well, you got the chart spread, you can't see it so well, but this is a big W.
Are you talking about this shape down here?
Yeah, the W, you know, even here, these little W's, and then up.
Mm-hmm.
And when it breaks this level, it's going to be another buy
Yeah, potentially, yeah.
until it breaks this coming down. To me, it's not a sell.
No, so I would agree with you. It's not a sell yet. We are in bullish momentum. Whilst you and I think, trade very different strategies, Ed, I think you're quite right. We are in bullish momentum now. And for me, I'm looking for a liquidity area. So this line that you've drawn here, we could go short from there. There's no guarantee it will continue pushing up. You are right, it is likely. But I think one of the most dangerous things you can do in trading is saying, this is definitely doing this is definitely doing that. You know, there's a probability, and sometimes there's a higher probability than others. But like anything, the charts can do pretty much whatever they want, whenever they want. So I do agree with you, we are bullish. Could we sell off from here? Yes, we could, absolutely. Could we sell off from here? Yes, we could. These are all potential areas to sell off from. Would I be buying from here? Probably not. Simple reason being is that I'm approaching areas that I would be expecting sells from. So
Well,
for
okay, yeah, we trade entirely different. I trade with momentum.
Yeah.
And trend.
Yeah.
So when it breaks this level here,
yeah,
I would be in a buy position. But if it broke down here, I'd be in a sell position.
Yeah, makes sense. Yeah, I'm with you on that. Yeah, I think you know, it's like anything, isn't it?
Okay,
I think
thank you.
all strategies are going to work.
That's my 2 cents.
Say again.
That's my 2 cents.
Yeah, no, I appreciate it. So yeah, but I do agree with you. In the short term, this is definitely a buy. There's nothing in here for me indicating yet that we're going to be going short. Right, I'm going to go outside and sit half naked in a deck chair. Lovely image for you all. Because it's
Really hope it's the top half.
Pardon?
Really hope it's the top half.
It'll probably be the bottom half. Who says I've got anything on my bottom half now?
Hey, don't stand up.
Guys, it's been great to see you. So just so you know, I've got a minute left. As you know, I've been pretty busy lately. My work has been pretty crazy, and I've been working on a few bits in the background. You'll start to see some more videos coming in. I've had the boot camp to do and bits and bobs. So I've been a bit crazy lately. You've probably seen a bit quiet on social media and stuff. I've got Glastonbury this week, and then I'm kind of back. And then July, I've got full focused because I want to kind of launch a few things, bring a few new members into the mentorship group, and get everything a bit busier. So apologies, I've been a little bit quiet lately. I'm going to promise you that we're going to get a webinar in at least once a fortnight. The ultimate aim is to do that once a week going forward. But what I want you guys to start doing for me is just reaching out to me a little bit more and just asking any questions that you have. If you have burning questions or things that you have unanswered, please pop them across to me either in a DM, and I'll record some content for you because I want to get some new content up on the YouTube. So anything you need, reach out to me. We'll try and get a webinar in 2 weeks' time, which will be when I'm back from Glastonbury and hopefully recovered. If you need anything in the meantime, just give me a shout, guys, all right? Wow, that was perfect timing.